Hello everyone, and welcome back to Capital Markets Quickie. I'm your host, Endrit Cela, here to guide you through the twists and turns of the stock market with a quick and clear update. Yesterday was quite the day for a comeback, so let's dive right in. After taking a hit from Wednesday's unexpected rise in consumer prices, U.S. stocks made a notable rebound on Thursday. The Nasdaq Composite, heavily influenced by tech stocks, led the charge, jumping up by about 1.7%. The Standard & Poor's 500 also saw a nice lift, rising around 0.7%, while the Dow Jones Industrial Average had a quieter day, just barely missing the mark to stay flat. Tech giants, often referred to as the Magnificent Seven, were at the forefront of this rally. Apple and Nvidia both surged more than 4%, with Apple in particular drawing attention. Amazon wasn't far behind, achieving its first record high since 2021 with an increase of over 1.5%. On the bond side, the yield on the 10-year Treasury steadied at around 4.56%, cooling off a bit after hitting its highest level since last November. This stabilization comes in the wake of Wednesday's bond sell-off, triggered by the CPI's jolt to the market. Speaking of inflation, Thursday brought a somewhat rosier scenario. The Producer Price Index for March increased by only 0.2% from the previous month, slower than many economists had predicted. While this year-over-year growth marked the fastest rise in nearly a year at 2.1%, it was still below expectations, offering a glimmer of hope that inflation pressures might be moderating. However, the market's reaction to the March CPI report on Wednesday had already recalibrated expectations for Federal Reserve's rate policy. Investors are now anticipating fewer rate cuts this year, possibly only 2, and those not until later in the year. With the first quarter earnings season upon us, all eyes will be on how companies are managing the high borrowing costs. We're especially keen to see how the big banks like JP Morgan will kick off the season today. Their performance could set the tone for market sentiment moving forward. That's all for today's Capital Markets Quickie. Thanks for tuning in. Join us again tomorrow when we'll break down the big bank earnings and see how the market reacts. Have a great day, everyone. Cheerio.